Welcome to today's edition of LIMRA Unplugged. I'm here with Jim Scanlon, who is a Senior Director of Life Insurance Research here at LIMRA. And we're going to talk today about some new trends in underwriting. But before we get there, I'd like to talk a little bit about the broader trend in life insurance sales. So we know that life insurance sales are flat. At the same time, we know that more than 7 in 10 people have said they know that they need life insurance, and yet fewer than 6 in 10 people actually own life insurance. So there have been a lot of suggested reasons for this disconnect, and one of them has been to look at the sales buying process. Is it too difficult or cumbersome? And so this is where Simplified Issue comes in. So Simplified Issue can overcome some of these hurdles. It can speed up the time to issue a policy. Our research shows that about 19 million people are stuck shoppers who have started the process but not finished. So what do you think? How are consumers interested in Simplified Issue?
Yes, our new barometer study did some research on that topic. And in that we found very broad appeal for the simplified underwriting approach. We found that over half the population, so that's 52% of American consumers, are more likely to buy a life insurance policy using a simplified issue process as compared to a traditional underwriting process. The broad appeal goes across demographic groups. For example, high-income households find that very appealing, and that's possibly because they're less price sensitive. Also, older consumers find the simplified underwriting process appealing, and that may be because they want to avoid a medical exam or a visit to the doctor.
Now, you did research looking at the appeal of Simplified Issue across consumers, and I know that I think it was 7 in 10 consumers said that the quick and easy was very compelling to them. What other characteristics of it were compelling?
Yep, right again, 7 in 10, fast and easy. That's the most appealing benefit to the consumers, but there are more. So 2 in 3 find the unbiased and objective pricing very appealing. Another 2/3 find the fact that it comes with very transparent explanations very appealing as well. So there's really 5 elements in all: fast and easy, as we said, transparent pricing, clear explanations, all appealing. Also, that ability to avoid the medical exam and to avoid the visit to the doctor's office. Those are 5 elements that have strong appeal to over half the population. So a very strong appeal to the consumer segment with this new approach.
Some compelling reasons then to go that route. So we talked about the benefits to consumers. What about life insurers? Where's the benefit to them?
Lots of benefits to life insurers as well. 3 areas really. One is faster issue. So as you had said, you have stuck shoppers. If you can get faster issue, then you're going to get a higher percentage of your shoppers to complete that purchase process. So that's a big benefit there. Another area is really faster, more consistent decision making. So if you have an automated process for underwriting decisions, you're going to get very consistent, not necessarily always better, but more consistent decision making on risk classifications. And then the other area is using more information and faster speed to issue to lower the cost of issue per policy. So if you reduce medical exams, underwriting, costs associated with data collection for that policy applicant, if you reduce those costs, then you can reduce the cost per issue, and then that makes every policy issued through that method perhaps a little bit more profitable.
You're cutting the expenses out, some of the expenses out, yes. So I spoke earlier about the 19 million stuck shoppers. Is Simplified Issue a way to appeal to them, and are consumers showing an interest in this?
I believe it will. There's 15% of the whole population shops for life insurance in a 24-month period, so that's a lot of people. But only 2/3 move on to get a quote. And so a simplified issue process that makes it both easier to get a quote and then a faster policy issue to follow that is a process that can make a dent in those numbers.
And what about the insurance companies themselves? How do they gather data if they're not going through the usual methods?
Well, primarily they're using the Medical Information Bureau right now, prescription drug database, motor vehicle databases. These are databases that have been available, continue to be available. They're making better use of them. But then they're also adding data to their models and to their rules engines. With the consumer's permission, they'll get access to medical data records as well as credit data. So it's a constant process of adding new sources of data, improving the process, and trying to get better decisions.
And I understand they're asking lifestyle and other questions as well, which kind of adds a whole other dimension to that.
Yeah, I think it's fair to say there's some even experimentation that's taking place in the marketplace, including photographs, facial features, and so who knows where it will go, but there's definitely a market out there. There's a lot of consumer demand, so if the industry can come up with the right solution for presenting the products and the process, then they can make a dent in this unmet demand for life insurance.
And as they get more data, they'll be able to make better predictions as well, which should increase quality also. So according to research we did last year, half of companies said that they offer automated underwriting solutions, and another 41% were looking into developing them. And we know that one of the biggest drivers was that they wanted to speed up the time to issue a policy. And we know that 3/4 of the companies that are doing it said they have in fact met that goal. So what do you see companies doing? What are the trends?
Well, the space is evolving. Companies are bringing new methods into their simplified underwriting processes. Some companies are focused on bringing policies with higher coverage amounts, so say up to $3 million. That's available now. Other companies are trying to reduce the number of questions or change the questions that they ask to get better underwriting decisions, as well as make it easier for the customer. So if I have to answer 5 questions versus 8 questions, I'd rather have 5. And then the third area is really in the issue time. As we talked about before, that's really important. So some companies are promising a quote to be returned within, say, 3 business days, which is a very short turnaround time compared to traditional underwriting and really even to some simplified underwriting. So the space is evolving, trying to make it faster, trying to make it easier for the customer, and trying to increase the product options that are available.
So I expect we're going to see continued evolution of these products.
I agree. I think that there's a lot of changes that will continue to happen in the marketplace. There's broad consumer appeal. Millennials in particular are going to be driving this market as we move into the future, naturally. As their generation ages, they're entering that family formation time right now, and then after that will become their prime earning years. They're very accustomed to buying things online and being able to buy things the way they want them. And so those expectations are being placed on the industry. So we find that 30% of consumers either buy insurance online or attempt to buy life insurance online currently. That's 40% of millennials. So that's a 10 percentage point difference right there. And in the future, both millennials and Gen Xers expect that life insurance sales online will increase a lot. And since those are the generations that are going to be driving the market, I think that it's safe to say that that's almost exactly what's going to happen. So we'll continue to see evolution in that space.
And I know our research now shows that across age groups you've got, pretty good spread among the younger to the older people, but expect that it will be appealing more towards the younger because they are the ones who want to buy direct. So that wraps up our discussion of simplified issue and automated underwriting. Jim, thank you so much for sharing your insights with us today. And I'd encourage all of you to go out to the LIMRA.com website to see more of our research on the topic. On behalf of Jim and myself, thank you very much for joining us today.